Okay, guys, here we get to the crux of the matter, which is your income statement. Now, please remember the income statement, your strategy should be to always read the required part first, as in what you're supposed to do, and from there, you read through your information and your additional information and adjustments. Now, I always suggest that you do the adjustments first for the income statement because anything that's left over doesn't have to change. So we're just going to enter the amounts in as is. So we're trying to save as much time as possible and just complete the statement as best we can. So we're going to actually start with the adjustments. Now I've set up the income statement here on Excel. I'm going to try and do all my calculations in here, and hopefully that's going to work out for us. And one thing to remember is the fact that they told us that, I think it was an answer sheet, the amounts calculated above must be transferred to question 1.3.1, the statement of comprehensive income, which means we're going to need the answers that we just completed here in order to do 1.3.1. But we're going to start with the adjustments at the top. Okay, so we're actually starting with the damage of trading stock. So we know the loss of trading stock is obviously going to be something along the lines of damage. So you can just write damaged stock, okay, and that's a loss for us. Now we're going to go back to damaged stock, and we know the value of that was 47515. So over here, we're going to write 47515. Okay, the next part is actually going to be the loss on the sale of the asset. Now remember, if you are making a loss, it's an expense. So loss of 4,500 Rand. So over here, we're going to say loss on sale of asset, 4,500. And please remember, even if your answer is incorrect and you know it, make sure to use the same amount given because it's a method mark. Regardless of whether it's correct or not, you can at least score 1 mark here because you transferred from the previous question. Right, and the next part regards our depreciation. Right, and our total depreciation was 357,300. So I'm actually just going to enter that here as well. Depreciation, and how much was that again? 357,300. So over here we write 357,300. Okay, now we go on to the other adjustments. So over here at number 3, 33,700 Rand received from a debtor whose account was previously written off as irrecoverable was posted in error to the debtor's control account. This must be corrected. Okay, so firstly, we're going to work on these adjustments, right? So now, money received from a debtor who was previously written off is known as bad debts recovered, which is part of other income. So over here, we're going to write bad debts recovered. There's no calculation necessary for the bad debts recovered part because someone who was written off a while ago came back and paid you their money. Regardless of what happened, they can no longer be seen as a debtor. So this amount should not be going to debtor's control. So what we're going to do is we're going to enter it here in the income statement as bad debts recovered, 33,700. Okay. Then they say provision for bad debts must then be adjusted to 3% of the debtor's control balance. Now we first have to determine the new debtor's control balance. So let's quickly go up and find debtor's control. Debtor's control is over here. It's 2,746,300. So I'm actually going to just move down here and do that. Okay, let's start at 34. All right, we have 2,746,300. Okay, now I want to go back to this adjustment. They're telling you that 33,700 received from a debtor whose account was previously written off as recoverable was posted in error to the debtor's control account. Okay, so guys, when they say that, it means they said, okay, this debtor came back and they're paying us money, right? So what did they do? they actually subtracted 33,700 Rand from debtors control because they thought, hey, it's a debtor who's paying us back. But that's incorrect because this person was already written off. So what did we do when we wrote off this person? We took the debtors control amount and we subtracted 33,700. So if we look at this transaction, what they did was subtract 33,700 again. They subtracted it twice now. That's incorrect. This person has already been removed, so we already subtracted 33,700. So in order to fix this error, we must now add back 33,700 to get the correct debtors control balance, which means debtors control is actually 2780000. Now, they're telling you provision for bad debts must be adjusted to 3% of debtors control. Provision for bad debts is actually a negative asset. It's an amount that we keep aside for in case debtors don't pay us back. So the provision for bad debts itself, negative asset, it belongs in the notes to the balance sheet and the balance sheet. But the adjustment for when you create this account is either income or expense. So please remember, it's income if you're going to reduce the amount of provision for bad debts. Why? Think about provision for bad debts as a separate bank account. Okay, you've set aside a certain amount of money for in case debtors don't pay you back. So let's look at provision for bad debts over here. Provision for bad debts, nothing, but it was 85,840. So that means in a separate bank account, just for explanation's sake, in a separate bank account, you had 85,840 Rand. Now, for the understanding of the idea, if they tell you provision for bad debts must now become 80,000 Rand, what happens? It means you must reduce your provision for bad debts to 80,000 Rand. How do you do that? You're going to take away 5,840 Rand from your separate bank account, right? You're going to remove it. So what does that mean? It means now you have this extra income of 5,840. So therefore, if provision for bad debts must be reduced, it's an income for you because now you have extra money. Whereas, if they said provision for bad debts must now become 90,000 Rand, the adjustment means you have to increase it. Where does that money come from? It's money that must come from your normal bank account, and we must transfer it to the separate bank account for provision for bad debts. So what are we going to do? We have to take money and put it into this account, which means it's an expense now. Okay, so remember, if you're going to reduce provision for bad debts, it's going to be income. And if you're going to increase provision for bad debts, it's going to be an expense. So now, let's look at what they're telling us about debtors control. The provision for bad debts must be adjusted to 3% of debtors control. So that means it's 3% of this amount. So now we're going to say 2,780,000 multiplied by 3%, 83,400. Okay, so now 83,400 is my new provision for bad debts amount. But how much was it before? It was 85,840. So what must we do now? We have to now find the difference. And remember what I said. If you make it less, it becomes income. If you make it more, it becomes an expense. So what are we going to do here? And can you see that it's becoming less? We're going to say 85,840 minus 83,400. And that gives us 2,440 Rand. And remember, guys, this is income because that is more than the new amount. So 2,440 is income for us. So here under other income, we're going to write provision for bad debts adjustment. That's important. Please remember to write that provision for bad debts adjustment. All right. And now we're going to transfer this amount of 2,440. So over here we write 2440. Okay, that's the next adjustment done. Now we move on to this one, number 4.